Hey everyone, welcome back to the News That Pulse Stock Weekend Show. I'm Mr. Volcan, and today we're breaking down Friday's sell-off and what it means for our short-term base case. Although we saw sellers dominate intraday on Friday, on the higher time frames nothing appears broken yet. Stick around because I've got two trade ideas you won't want to miss, plus a deep dive into our technical levels and market internals. Let's kick things off with the SPY weekly time frame. Notice the solid red candle from Friday, with minimal wicks, especially at the top. This confirms that sellers took charge, testing the lows of our weekly range, largely due to Friday's down move. However, even though we recorded a higher high and a higher low on the bar count, the overall weekly trend remains intact with firm higher lows forming a solid sequence. Essentially, despite a brief test above our balance range, the weekly structure remains healthy as long as support holds around the 595 level. Now, if that key low were to break below 580, we'd start talking about a potential double top formation. But as of now, the weekly trend is still intact, suggesting there's nothing catastrophic on the horizon for our higher time frames. Moving down to the daily chart, things get a bit more nuanced. We've analyzed the expected move for this week, with the upper bound at around 611.20 and the lower bound near 588.69. Although Thursday closed with a promising hammer candle that held above the crucial 6,675 level, Friday's strong sell-off pushed price acceptance under that same level. That's the critical point. As soon as we see price action breaking below the Thursday low, it signals that our base case is starting to erode. In other words, an equal low forms on the daily chart, meaning we no longer have the clear daily uptrend we once saw. On a practical level, if price continues to test and hold below these key support levels, particularly around 6,675 and then near 595, the risk of further downside grows, even though nothing dramatic has unfolded on the weekly scale. Let's zoom in further to the hourly chart. On Friday, we witnessed a clear one-sided move, almost a straight sell-off. Look at the 5-minute breakdown. There's a clear rejection once price fails to hold above Thursday's consolidation zone, and then undercuts that key 6,675 level. With each lower high on the hourly scale, the odds start stacking toward further downside. I also pulled a Fibonacci retracement on Friday's move. Notice how the 38.2% level coincides with our key support, confirming that any rally attempt failing to reclaim that level would add to the bearish sentiment. In other words, the intraday action tells us that buyers are getting squeezed, and that's a red flag if we're planning counter-trend moves. Now let's talk internals. On Friday, the internals dashboard showed substantial volume outflows and a deteriorating advanced decline line. Even the cumulative tick dropped significantly, suggesting that the sell-side pressure wasn't just a fluke, it was systemic. We also looked at the market profile on the ES chart. Notice how the point of control in the value area shifted cleanly lower, confirming that sellers stepped in decisively. The lack of any meaningful rebound at key levels further reinforces the idea that the market is testing its support boundaries. Beyond SPY, I dove into the weekly charts for Nasdaq's QQQ and even the small cap index IWM. In QQQ, the structure remains similar to SPY with that same higher high and higher low, yet it's still confined within a sideways consolidation range. A key level to watch here is around 50,325. If broken, it could signal a shift toward a more aggressive move. In small caps, the picture is even more bearish. The IWM chart shows clear signs of a head and shoulders formation, and the market profile confirms that sellers are dominating. This divergence between large caps and small caps tells us that while the overall market might seem stable, sector rotation is occurring. Defensive sectors like consumer staples and healthcare are outperforming, while risk-on sectors such as discretionary and tech are lagging. Even bond ETFs like TLT are drawing safe haven flows. Now let's get into the two trade ideas I promised. These ideas are based on our in-depth technical breakdown, and as always, every trade is its own setup, especially when the market is in a neutral, range-bound phase. First trade idea, look at Progressive Insurance, ticker PGR. Progressive is breaking out near that round number of 270. On a monthly time frame, we see a promising higher low and even a potential cup and handle formation. If price holds above 261 on a retest, we might be looking at a blue sky breakout. That said, manage your position size carefully since we're dealing with range-bound conditions. Second trade idea. My more controversial idea is with SMCI, super microcomputer. SMCI is flirting with key support around 50 and 49. This stock is showing signs of forming an inverted head and shoulders pattern. If we see a clean retest of these levels and a subsequent move higher, it could offer a high reward trade for those willing to take on a bit more risk. Remember, these ideas are not guarantees, they're scenarios based on current technical levels. Of course, technicals don't tell the whole story. On the fundamental side, keep your eyes on upcoming earnings. Most notably, Nvidia's report on Wednesday could be a catalyst. Home Depot and other big names are also set to report soon. And even the Fed's next move is under scrutiny. Our internals suggest that the market's risk-off posture is further reinforced by rising safe haven flows into bonds, and a flight to quality in defensive sectors. Meanwhile, economic data like jobless claims and PMI numbers will be crucial to watch in the coming days. To sum it up, Friday's sell-off has nudged the market into a neutral, range-bound phase. On the weekly charts, nothing dramatic is breaking down yet, but on the daily and hourly scales, key levels like 6,675 and 595 are critical. Our trade ideas, from a potential breakout in Progressive Insurance to a setup in SMCI, offer a couple of actionable scenarios if the market continues to show weakness. It's essential to keep your trading time frame in mind. For swing traders, focus on the daily setups and key support levels. For scalpers, the intraday signals on the hourly and 5-minute charts are your best friends. And always remember, never confuse outcome with process. Just because the market had a rough session on Friday doesn't mean a massive crash is imminent. It simply means we're in a consolidation phase, and every trade in this range needs to be evaluated on its own merits. That's it for today's in-depth market update on news that pulse stock. If you found this video helpful, please give it a thumbs up and subscribe for more analysis, pre-market prep sessions at 8 Eastern every trading day, and additional trading resources linked below. Drop a comment down below if you have any questions or if you'd like to share your thoughts on today's trade ideas. Thanks for watching, enjoy your weekend, and here's to a green trading week ahead. See you on Monday morning.